to me, this is when like it becomes interesting to start building like those DeFi applications that can actually go to all of them. Because once those users, even if they are Brave users, right, or Audius users, if they're on Solana, if those companies choose to switch to us because we're the fastest, cheapest, censorship resistant computer out there, those user keys are actual valid keys for Solana. We can start building DeFi applications that capture the network effects between all of them. And those companies will want those things because they're effectively almost like features in an operating system, right? Like stablecoins, all this stuff. Like those users will want those features. And this is where I think real value creation will start occurring.
Layer 1 is a podcast and community dedicated to helping you master all things crypto. We'll be bringing you the best interviews with project executives, technical analysis for trading of the most popular cryptocurrencies, and insight into what's actually happening behind the scenes.
As you join us each episode, you're going to hear about tokens, fundraisers, investments, and even crypto conspiracies. But please remember that nothing we say should be considered financial or legal advice.
Come join us on this journey, and welcome to Layer 1. All right, guys, good morning, good evening, good night. It's another episode of the Layer 1 podcast. We have a great interview guest. As always, I'm sitting here with Dimitri, who's in a new abode, it looks like. Man, he's killing it. But our guest actually upended his Zoom background here, so I want to hear some of that. But Dimitri, how are we doing today, man?
Yeah, I'm doing great. I'm excited about this guest. We have Anatoly here from Solana. He's also from Ukraine, I found out. So that's great. He's from originally from Odessa. So we have another Ukrainian person.
Yeah, absolutely. We did like the pre-episode banter here, and we found some things out. We also found out Anatoly is trapped in a San Francisco apartment with two young kids. So if there's any kids in the background, you guys will just have to deal with that.
Yeah.
So
Yeah, 2 kids under 4 in an 800 square foot apartment in San Francisco with 1 bathroom.
I do not envy that situation, but we do again. We have Anatoly Yakovenko, the CEO and co-founder of Solana. This is going to be a great interview. We always start out talking about your background, Anatoly. So before we get into Solana, before we get into more of the macro crypto markets and things like that, let's hear about your background coming into crypto.
How far back do you guys want to go?
As far you're a baby.
Well, like I like as we kind of briefly chatted right before we started this, I was born in the Soviet Union, and like actually the Odessa is kind of known as being like the counterculture part of the USSR, and I kind of grew up with this like almost humorous disposition of like the authoritarian overlords that were always ever present, So like crypto is like kind of naturally that, right? This is a big FU to central banks, to fiat, to governments, that we can build something purely in software that can function better, more transparently and fairly to everybody involved. Especially like, again, right? Like when crypto started, really was like at the peak, kind of at the peak of the financial crisis. I think Bitcoin came out right before, like there were, am I wrong? I don't remember the exact sequence of events, but when I first heard about Bitcoin was right around, I think 2009, right after the financial crisis. We saw this craziness, and the kind of European Union was almost about to break apart, and this thing called Bitcoin, everybody was kind of started talking about it. Oh, there's like a new currency. At the time, I was working at Qualcomm, software engineer by trade. I've been like working on performance optimizations, basically. As soon as I learned how to code, first language was C. Right now we're coding in Rust, but I would have said last language is C as well. But Rust is pretty good evolution of that. But anyways, like, you look at Bitcoin and you're like, this is cool, but I don't think it can scale, was kind of like the first thing that I thought. And the same thing about Ethereum. I thought it was a really cool idea to add like a transactional based Turing complete virtual machine on top of this very novel consensus algorithm. But also it looked like something that would be very hard to scale to a large number of users. It wasn't really until 2017 where obviously this was driven, I think, by the financial success of both Ethereum and Bitcoin, but like people started throwing out like crazy ideas of how to solve these problems, like ridiculous stuff, like the IOTA paper and like a bunch of stuff that could never work, but some stuff that could work, like Tendermint, that's been tremendously successful, and as well as Tezos too. And I started really seriously thinking about it and how I would solve this problem. And I kind of had this light bulb moment in the middle of 2017. My buddy and I were working on this. This was a silly idea. We were building a deep learning kind of infrastructure project where we could offset the cost of the GPUs by mining crypto. I'm sure there's still startups chasing this around right now, but it makes sense, right? You got to buy a bunch of GPUs and like put them somewhere. And if they're idle because you don't have enough deep learning business, you just mine crypto, right? Pay for some of the costs. And we were just talking about like, well, like, what if there was like some better ways to scale proof of work, and like how could we make this thing work? And just started talking about single threaded mining. And I had too much coffee. It was up till like 4 in the morning. I had this light bulb. Oh wait, there's a way to actually use similar data structure to encode how time passes. Like you can actually generate a proof of time passing. And that was really when I kind of had this realization that once you have a source of time, all the stuff that I worked at Qualcomm, cellular networks, all these protocols, they're all based around the idea of time. You split the network by time, and basically everything becomes easier. Why is it that Bitcoin is so slow, but we can have, a million devices all talking to the same cell tower? Yeah. It's because they have a clock that's synchronized within like, I think, sub 5 milliseconds right now. Like that. So like once that light bulb went off, I was like, okay, I have something. Didn't even worry about like what consensus algorithm we're going to use, how this thing is going to be put together. But I knew that I could construct a clock, like a virtual clock, and that was it.
So why is time the major factor around kind of creating a scalable network and providing that security, and also having that network not be kind of hoarded by people in like that plutocratic method where people can just, get a strong amount of the distribution of tokens right up front?
Well, the latter part, time doesn't really help you there. Indirectly, I guess we can say it indirectly does. So like kind of the basic idea with using time was really just kind of the first radio protocols people built. You have two towers at the same time over the same frequency. If they transmit signal, right, you get noise. That kind of makes sense, right? Electromagnetic waves interfere in the air, and you can't discern what information is being passed. So the first thing that people did is like they gave each tower a clock, and they synchronized those clocks, and they would alternate based on how well those clocks can be kept synchronized. So like maybe every minute, maybe every hour back in the day. By World War II, I think it was down to like every 10 to 5 seconds or something like that. And when we got cell phones, like those first protocols, literally it was called time division multiple access. You have a bunch of things that want to transmit data, you divide it by time, and multiple of those get access, right? That's it.
I really do want to get into the tech behind this, but I also feel like I'm out of, I'm in deep water here with the actual technology. So from like a basic understanding, can you like break down the technology, I guess, that runs the network?
So we're doing it right now, right? We're taking turns talking, because if we talked at the same time, we can understand what the hell is going on. Mm-hmm. That's the basic premise. And that is the problem of block producers, right? In the proof of work network, if every block producer is producing a block at the same time, you have no clue which is the right ledger. So Nakamoto does this very clever thing with a difficulty adjustment, such that it doesn't matter how much hash power you have in the network, a block is produced roughly once every 10 minutes, right? So if the network grows, right, the difficulty goes up, or if the network shrinks, the difficulty goes down, right? It adjusts both ways. And you end up with a network where somebody somewhere in the world produces a block once every 10 minutes. 10 minutes is long enough for this data to propagate around the world reliably. and therefore it's very unlikely that you have a collision.
Mhm.
So does that make sense?
Yeah, no, I want to touch on specifically sharding as well, because you guys are kind of, a lot of the wording around your branding is this idea that Solana doesn't shard any data, right? Or it doesn't have sharding within its processes. You even have a podcast called No Sharding.
Right.
So if you could kind of like break that sharding aspect down, I would love to hear that.
So a lot of folks coming out of the crypto side and even the traditional consensus side, they only look at the problem as, but it's in every paper that you look at. We assume we make weak assumptions about time. Like you look at Tendermint, you look at every consensus paper out there, and it starts, this consensus algorithm works, up to 1/3 of the nodes failing, and even with weak assumptions about time. Well, when you do that, you like leave a whole 100 years worth of optimizations on the table. And the reason why everybody's going into sharding is because there's effectively limits of how fast you can make consensus work. Ethereum is going to be the fastest proof of work chain out there. They've basically optimized it down to as far as you can practically go. There's folks that can build faster stuff, but I think if you look at it deep enough, there's probably something that's broken about their design. So what Ethereum has right now, where you have 15 seconds, there's a block produced every 15 seconds, it's probably as fast as it's going to go, without doing something magical like ZK snarks or whatever. But effectively, like, if that's as fast as it's going to go, you can either do that or do something like Tendermint, where you have a block every 5 to 10 seconds, not much faster, right? And that's for traditional PBFT consensus. And even something like Hot Stuff, where what Libra's using, which is basically Tendermint, but it's pipelined, it's also not any faster because it's still going through the traditional full rounds of consensus on every block. So because you have to have every node communicate with every other node and decide on what the current state of the network is and agree on a particular block, that basically limits the latency of any of these systems. And the only other direction people wanted to go is, well, why don't we build multiple of these systems called shards, and we somehow coordinate agreement amongst these shards. That agreement and coordination, and then how you pick which validator gets to be in which shard and for how long, that problem is as complicated as consensus. It's just like an immensely difficult problem. And because you're kind of layering this problem on top of another one, you have a system that is very hard to analyze from a security perspective, because you're not sure if the validators in any given shard can trust validators from any other given shard at that moment in time. They can withhold data from each other. They can do all sorts of, like, just the number of attacks that you have to deal with goes up by like another order of complexity. And not that these problems won't be solved, it's just what you're getting out of them is a system that you have two slow systems that can work in parallel, right? That's all you built. And that's why that thing isn't like very attractive to me. Like, it's like I have an opportunity to build a computer chip that is faster, or I can build one that can do more stuff in parallel, but each one of those cores is super slow. And that's how you can kind of think of sharding, is that you have a bunch of slow cores.
So we kind of covered a little bit, obviously got into the tech right away. Solana in general, right? So it's a, a network for blockchain, right? So we have another protocol that, basically people can build on, they can utilize it in many different levels. We've seen protocols come into the market, obviously doing kind of different, like a little bit different stuff, but like the speed and scalability was like the hot topic that they wanted to attack. And we did have, some protocols that come in and, come out with scalability and all these things that are available. And we haven't really seen much traction from them, but I wanted to see, like, what do you guys see for Solana in general? As far as the protocol goes, where do you see that being utilized, in which sector, maybe in crypto or outside of crypto, in traditional finance, or where do you see Solana kind of fitting?
So you guys ask a really good question. Like I think typically when you look at like kind of like the venture funding cycle, when you have a lot of money, you have way more riskier stuff that's funded that's way further out from product market fit. And we were in that space not only in just like the venture funding cycle because the economy had like a 10-year run, but also because crypto also had this enormous explosion of money coming into it. And there was just a lot of new investors putting money into a bunch of ideas that may or may not be successful even on just a purely technical level before even thinking about product market fit. So like the way we've been trying to approach that is we're trying to build a system that I can't really imagine my parents using. It's not a direct to consumer thing. Like, why would my mom care about Ethereum or any of this stuff? She may care about like the store of value story for Bitcoin, but we're a proof of stake system. I think the store of value argument there is weaker. So it's more of a, like the way I see it is we have a software as a service that's a censorship resistant computing platform. And I think those things have places where you want to build something that can generate value from like network effects amongst users, right? And really kind of like these things are DeFi ecosystems, but I think ultimately, initially, they're going to be web companies. It's folks like, you know, Brave, like Kin, Audius, Props, I think. I don't know if you guys are familiar with those projects. I'm sure you're familiar with Brave.
Yeah, for sure.
But effectively, it's a Web2 company. They have taken a traditional Web2 business, which is a browser with an advertisement play, and they've introduced crypto in there as a kind of replacement to ads. That's cool in a lot of ways, right? Because if you have something like crypto that's replacing ads, it means that they're not incentivized to steal our information. They can actually make money through financial transactions, and that's great, right? Like that's fine. And it's a new business model, and in itself, it's risky, but it is required a lot of users for it to scale to actually make enough money. So for us, those are really the prime companies that we're going after, effectively doing B2B sales. Somebody like Brave is using a centralized service called Uphold, which does a lot of their kind of like batching and transaction processing. And there's a lot of trade-offs there in terms of fees and kind of how that operates. So for us, we can offer them, here's a decentralized equivalent, censorship resistant computer, go use that. That's like really been what we've been focusing on the crypto side. Again, probably this is unique to our team is my background is former Qualcomm. A bunch of the folks are ex-Qualcomm. There's this really gnarly problem with 5G. You know, everybody talks about it, you know, 5G is coming, but it's really expensive to deploy because the tower ranges, if you can imagine this, they're like 500 feet. So 4G towers are 30 miles.
Yeah, why do the tower areas decrease, or like distance between each tower decrease as opposed to increase?
Because we're using higher frequencies to stuff more data into these devices. And those have different wavelengths, right? Lower wavelengths. So for them to travel farther, you have to increase the power to a point where it's unsafe. So this is basically the safe distance to which they can propagate to your phone.
Got it.
So they're effectively routers, right? They effectively become Wi-Fi routers. But like somebody like Verizon has to blanket United States every 500 feet. There needs to be one of these stupid things.
That's insane.
Yeah, and your phone is actually going to be connected to probably a dozen of them at a time. So when you're looking at like a crazy deployment like that, you're basically like, well, I can do it myself, or I can farm it out to a bunch of tower providers. And it looks like it might be like somewhere between 500 to 1,000 of them in the United States. And that seems like a simple solution, but imagine you're driving and your phone is constantly switching connections between all of these and using different data and requesting different data rates. And some of them say, I'll give you this high rate, but won't actually do it. that's becomes a really gnarly billing problem with adverse effects, because tower providers want to say that, here, I'm going to give you this highest rate possible and charge Verizon the highest possible rate, but actually I'm not, right? Actually, the connection will fail, right? So this is a really hard problem to implement with like a traditional asset database. It
Yeah.
is actually the same problem of blockchain, right? I have a bunch of people I need to pay, right? And none of us trust each other. We have to coordinate who uses whose data, or I mean, who uses whose resources, and pay each other to do that. How you solve this with blockchain is you like use a token, right? Carrier gives the phone token, the phone gives the tower provider tokens, and then that pays for bandwidth. And if the provider lies, it doesn't give it any more tokens, right? So effectively, you can kind of like create the system where you use fake money for bandwidth, but it ends up being real money because it's if it's in an open public network, that actually represents dollars being settled eventually.
Got it. So we kind of skipped over this initially, but your time at Qualcomm, was this move from like 4G to 5G? Were those the technology kind of problems that you were trying to solve while you were there? Like what are some technical, like we see in crypto, right? We're all trying to like move to a certain technological standpoint so that it can be scalable and all these things, all these hot terms. But what are some like tech innovations that are happening behind the scenes at areas like Qualcomm while you were there? Was it this 5G?
So 5G was a big part of it. So I was there from when we rolled out those really early implementations of 2G, if you ever remember EVDO. And I was actually more on like the operating system side, which was really dealing with like new chips that were fast enough to actually run the stuff, and power management, and like getting the operating system to do the right thing. And these technologies, we depended on an improvement in the process design and the fabrication process to be able to handle more frequencies, basically larger antennas, more data that can do more error correction at the power that wouldn't, burn your hand. So the challenge is like, you can always give it enough power and do the right thing, but how do you do it in a way that like you can actually hold in your hand? So that was kind of like what those folks are optimizing. It's really hard problem. Like the folks that are working on the radio stuff are, geniuses. It seems like compared to like what are hard problems in engineering, like on the software side. So go ahead.
No, I don't want to get too far off the question that
Yeah.
Dimitri was talking about, right? It reminds me of the I think the quote was from Bill Gates, where he said content is king, but distribution is queen. And you see a ton of technologies that are absolutely phenomenal within crypto, but without a strong community or kind of that baseline community, like nothing happens. But you just talked about not being B2C, right? So what is actually that SOL token going to be utilized for then? Because a lot of people expect, okay, I have this utility token that I'm going to use as a network participant, right? So what is the SOL token going to be used for going forward?
So it is effectively like Ethereum's gas, right? It pays for storage in the network for transaction fees. So like one of our partners that we were onboarding, they went from like, I think 1 million monthly active users to nearly 3 million monthly active users for their crypto product. So all those account data, all those transfers, everything like that needs to pay some gas. And ironically, right, our goal is to actually make it as cheap as possible for them to do that, right? We actually want to optimize our software such that it is the cheapest possible way for them to run this censorship resistant computer, right? Because right now, the 3 million users, it's not a lot. If you're like a social network in Silicon Valley that's trying to raise capital and all you have is 3 million users, you're not going to get far, right? You actually like have to think about this thing needs to make money, like real money, when we get to like 1 billion, right, users. So our goal, kind of think about it is, can we design the system such that it can scale that far to 1 to 2 billion users? So simple way you can make money there is like just from account state. Like all these companies, between all of them, it's 1 billion users. It is the most expensive storage out there, but it still should be cheap enough for them to actually get there. And I kind of imagine that it'll probably cost about $1 a user a year if you combine all of their data and kind of put it all together.
So when you were mentioning this client that you guys are onboarding, that's something that's going to be done in the background for those millions of users that they won't,
Yeah, they won't even know.
They won't even know,
right? They just see that now they have 400 millisecond blocks, and all of a sudden all the confirmations are faster.
Nice. So it's like it's a pretty like win-win situation in that case.
Right. Like, do your parents, like when you get a new if Microsoft could swap out the Intel chip on your computer, you wouldn't know, right? But all of a sudden stuff gets faster.
Yeah, absolutely. Yeah, definitely in the background. So let's talk about kind of how Solana went through the raise. You guys raised funding, I believe it was 25 million private, right? And then you guys had a public, I guess sale.
Yeah.
It was 1.7 million.
So that's the total that we've raised in I think the 2 years of fundraising. I think it was like more closer to 22, but I think all the information is public available on the Edgar website. So if you search the SEC, you can kind of find all the data.
Mm-hmm. And so the when you did the private raise, was it like in tokens, equity? Is that information?
It was tokens.
Tokens. Okay.
Yep.
So like usually the next question that comes to mind is that, what is the kind of like the lockup periods you guys have for some of those investors, because if the token hits the market, the usual question is like, are the private sale guys going to be unloading on retail?
So we kind of like, if you look at Bitcoin, I think a lot of its value comes from it being probably the most liquid asset out there right now. You can actually probably has the lowest spreads, fastest kind of conversion from any currency into Bitcoin and vice versa anywhere in the world, 24/7. And that kind of liquidity in itself has, I think, value, but it's also really a tremendous kind of it is a requirement for the security of any kind of layer one. If you don't have that, then you effectively don't have none of these economics that people expect to work for proof of stake systems, where an attacker has to go buy the tokens to attack the network. They just don't work. So in that sense, we looked at performance of previous layer ones, and what we saw is that these kind of unlock schedules seem to really create negative effects if you want to think of it in the token economics of the entire network. Partly, if you think about it, I'm let's say I'm a believer in some project X, and I can look ahead and see that the locked up tokens a year from now being sold at 70% discount on over the counter. My strategy, even if I love this project, is to sell my current tokens and buy 3 times more tokens a year out.
I see. Yeah.
Right. That is the obvious strategy I'm going to take if I am long this project, and if I'm short, that I just right, then it's even worse. So what we decided is kind of borrowing some of the good ideas that we saw out there, and we did a price protected sale for stakers, which was the Coinlist auction. And this, if you stake your tokens in the first 3 months, you get a price guarantee up until month 12. What the price guarantee really is that when we did the sale, we escrowed 90% of the proceeds. So you can go claim them back by month 12. But at month 9, all the investors unlock. So we just kind of pull the pin out of the hand grenade. We don't know which way the price is going to go. Fair market value will discover it, and then we're done. Right? At that point, the token is distributed to as many investors that want it at whatever price they want to, and we actually get to build value. We don't actually have to think about it anymore. And for the folks coming in now, right, what we're worried about is, what if we were wrong about this price, right? First year for layer one is super volatile. Nobody knows exactly where it should land. So for us, that's where that price guarantee comes in. If we're wrong, then we at least protect our community, right? And we actually get to keep them, potentially. To me, that seems like the closest thing to what the Ethereum folks did in their ICO, which is almost I think, kind of the gold standard. they didn't know what they were doing, but they ended up being more right than wrong in a lot of ways.
Yeah, you guys did that public auction on Coinlist, and you raised, like Dimitri said, 1.7 million. And so why choose Coinlist to go about this auction process? Did you guys have a contact at Coinlist? What was the process there of getting set up on that platform?
We've known him, I think, for a long time, kind of almost since the white paper days. And they're just kind of a good, solid team that has done this before and gave us a lot of really good feedback on how to structure the price guarantee for stakers. Actually corrected a few things that we thought we knew what we were doing, but they're more on the finance side, and helped us out a lot. So we're super happy with how it went.
So we had a couple community questions come in. Specifically, I want to point out one from Meta Crypto. So Meta, thank you for commenting on our Telegram. He had a question about the staking economic model. So we're kind of on the topic of staking in a proof of stake network. Couldn't get out of the episode without talking about your staking processes. So how does that unfold?
It's similar, I would say, in like a lot to Cosmos. There's only one token. You create a staking contract and you delegate it to some validator, and the validator, based on their voting behavior and their block production, earns rewards, and then you can claim them. Our kind of staking warm up and cool down period is 2 days. It's fairly fast. We want to be the fastest at everything. There's reasons for that. Is we can kind of rotate poor performing validators out of the network faster, which means we can have a higher SLA for clients that need it. So from that respect, it's not that far off from Cosmos, but with slightly different parameters. So we don't have inflation enabled yet. The foundation is going to kind of create a proposal and kind of propose it to the validators and kind of set the inflation parameters. I don't expect them to be much different from what Cosmos has, simply because our set of validators has a lot of overlap with that network. It's almost the exact same folks. And also it seems to work. So we don't need to experiment, but when things are working in other networks, we'll definitely borrow those ideas.
Yeah, absolutely. Yeah, we definitely spoke to some people like that, where they would look at certain networks and look at, some of the solutions and problems, and then take that experience and if it's not broken, why fix it, basically. So you can use some of those elements. The same person also had another question in regards to smart contract auditing. Did you guys have any audits done for your platform?
Yeah, so we did an architecture audit 6 or 7 months ago. Right now we're going through a code audit since we kind of hit 1.0. So kind of standard approach. The firm that we're using, it's Kudelski. I don't know if you heard of him, but they're kind of like a go-to firm for a lot of kind of security stuff related to cryptography, more in traditional kind of enterprise Fortune 500s. But they've done on the crypto side, they did the Zcash sapling audit. Pretty smart folks.
Nice. And then so where are you now? Like, you're now obviously in testnet, right?
No, we're live. So we have a mainnet beta out that's out, and beta is in Gmail beta. It's practically feature complete. The stuff that is still feature flagged is the full smart contract VM. So that's probably will get turned on the next release, which might be end of this month, but probably next month. Yeah, so if you actually go to solanabeach.io, so the name Solana comes from Solana Beach in San Diego County, where myself and like a couple of the co-founders, we lived there, and we would, wake up, surf, bike to work, bike home, surf again.
Nice.
And one of our validators built this network monitor and called it solanabeach.io.
I want to make sure that people kind of understand that as a proof of stake network, we've seen a ton that are like very user facing, but are there going to be platforms that you foresee kind of just build on Solana because it's the best opportunity for their application and their decentralized application and things like that? What does Solana look like in a year or two even?
Still making blocks. So I mean, like some of the stuff we want to do is we're still like ideologically, like we want to optimize and keep optimizing. Um, you know, like not these TPS numbers, they're meaningless, but until they're not, right? And like kind of what we want to see is the ability for us to scale up to any kind of demand. So if there's demand for 1 gigabit worth of transactions, we can scale up to that. If it's 20 gigabits, what we can also scale up to that. And those engineering problems are challenging but solvable. So that's kind of what we want to demonstrate. I'd love to actually demo on the open internet something that can hit 1 gigabit, which would be like 500,000 transactions per second. So basically 10x from now. But that would require a big pile of optimizations that we haven't done yet. So that's really where the tech is going. And more on the adoption side, we already see, like maybe, you know, can count them on one finger, but we can actually see these companies that are getting near 1 million monthly active users are already above it. There's nobody, I think, at 10 million actual crypto monthly active users. We'd love to get all of them on board. We're talking to all of them, and this decision for a project to move from whatever they're using now to a public chain, it's a complicated decision, right? This is like a really deep business relationship. So that kind of sales cycle is actually very similar to a B2B big enterprise sales cycle, right?
Yeah.
So hopefully by the end of the 1 to 2 year mark, we have 10 million monthly active users between all those projects. And to me, this is when like it becomes interesting to start building like those DeFi applications that can actually go to all of them. Because once those users, even if they are Brave users, right, or Audius users, if they're on Solana, you know, if those companies choose to switch to us because we're the fastest, cheapest, you know, censorship resistant computer out there, those user keys are actual valid keys for Solana. We can start building DeFi applications that capture the network effects between all of them. And those companies will want those things because they're effectively almost like features in an operating system, right? Like stable coins, all this stuff. Like those users will want those features. And this is where I think real value creation will start occurring. It's still hard to tell like what that looks like in terms of like financial gains, but it has to be, I think, something that looks similar to what how traditional finance makes money, which is typically based on like some percentage of assets under management or volume.
Right.
You know, if you think about it, like the entire world, I think we spend like $20 trillion just moving numbers around.
That's
like,
crazy.
yeah, it's like roughly like, you know, 20% of the world's GDP is spent on this. So if blockchain is successful, right, if we get that number down from 20 trillion to 1 trillion or half a trillion, we effectively give everybody a day off for the same standard of living, right? Even if that one chain becomes the $1 trillion chain, if that's even possible, right? Like that kind of like, right, that's why this space is so exciting and there's so much money pouring into it, is because as ludicrous as it sounds, you can kind of imagine it, right? You can like, okay, we take all of this financial stuff that requires a big pile of regulation, humans, and we move it into smart contracts that have this like verifiable security, right?
Yeah. We were at ICO Alert in 2017, me and Dimitri, and we saw a plethora, obviously, of ICOs come through the door. And I think at that point in time, it was just like, go out and use blockchain for everything in the world, right? And now it's 2020, and it's like, okay, no, actually, just use blockchain for this stuff, but do it really well.
Well, like I want you guys to realize that like 1996, nobody could tell you that pictures of cats in your family and just sharing them with your friends and family is going to be worth $500 billion, right?
Yeah.
Nobody had like that vision, and if they did, they were way too early. You look at them like they're crazy, right? So like we can only look back in retrospect and say, okay, yeah, that was obvious, right? It's obvious that like humans want to talk to each other.
Yeah.
The meme of Good Morning
Right.
America, where it's like, what is email, is always my go-to when it comes to that. It's interesting that you talk about token economic models. I don't know if you saw that Reddit announcement where they're planning on using like Karma for community points, which are going to be used on the
Yeah.
Ethereum blockchain. That would be, first of all, that would be a great target for Solana. I think that's like the way we're going, right? Like now someone can use those community points. Maybe there's a secondary app that can be used with the community points from Reddit within that little ecosystem. So I love that you talked about those token models popping up within, each ecosystem. So
And that's awesome. Like imagine they get rid of ads, right? Reddit has no incentive to actually steal your data. If they can make money off just users sending those points to each other, they make like some tiny percentage of every transaction. That's a good thing, right? Like that's great. Let's do that, right? Like we kill the beast effectively.
So let's talk about DeFi, because I know you talked you kind of mentioned it there. You guys did partner with Chainlink. Obviously, Chainlink was involved in those. I would call them DeFi kind of exploits, not hacks. But what is the importance of partnering with Chainlink? What do you provide Chainlink? What service are you providing there?
So we've talked to them also for a long time, and kind of waiting to make this announcement. And I think the timing with the markets was just almost perfect, because we saw that on a chain like Ethereum, the gas prices shot up and oracles failed. Simply that the cost of providing a price feed into the contracts that depended on these oracles was too expensive and too slow during a market panic. So what we kind of want to build is a 400 millisecond oracle that's nearly free, because our transaction costs are $10 buys you a million transactions, basically.
Oh, wow.
So,
Yeah.
right?
Yeah.
If you have so why sharding sucks is because when you shard the system, you're also sharding capacity, right? You have 5 shards, each with 1,000 TPS. That price per transaction has to be high enough to prevent spam on any single shard, right? That's going to be 5 times higher than a single shard with 5,000 TPS. So, right, does that make sense? So if you have a sharded network, it's going to be more expensive for the end user, and you will still see those kinds of market panic attacks. And those things effectively prevent DeFi applications from working in the critical time that they're supposed to.
Right. Yeah, I definitely see that. I feel like, sharding was kind of like a band-aid over, the problem that that we had in crypto in general. And it seems like you guys are coming out with a real solution and working on shifting, people over, or networks over, or platforms over. One thing that it's interesting that you mentioned, about just moving numbers around and how much it costs. So we had Alex Mashinsky on the podcast, and he talks a lot about VoIP, voice over IP. When that got introduced, he was part of it, and he did many things. In
I had a voice over IP startup at Urbana-Champaign in like 2000.
Nice, yeah. See, so and so now he's talking about MOIP, which is money over IP. And that transition there, how this is going to be kind of part of the movement, how we're moving along, and now things are going to be way different in the background. We're not going to know how this technology is really helping us and everything. So I just wanted to mention that, but also
I love it. I love the whatever the backronym MOIP.
Yeah.
Did he come up with this?
Yeah, he did. Yeah,
It's
I think
funny.
he was trying to. Yeah, he was trying to. I think was he trying to trademark it or something.
I think he tried. He said
Yeah.
he said he coined VoIP too, I believe.
So, which is actually another Ukrainian person. I believe he's from Ukraine as well. So he's a great guy. But anyway, so going back to the DeFi space, right now they're definitely struggling. There's we hear about Maker and all these issues that are happening right now. So what do you see for DeFi right now? Are we going to see more pain? And these exploits continue to happen, because it seems like there's no really solution that's being presented right now to kind of fix the issue. It's everybody's kind of on the same ship and trying to get the water out as fast as they can, as they as the DeFi overall is kind of submerging the water.
So I kind of have a different view. I actually see that the fact that Maker survived the biggest crash in modern history, in the macro in the world, is like kind of a testament that the stuff works. There's
Yeah.
kinks, right? We had flash loans, which are actually not like a feature, not a bug.
Right.
The stuff we just don't have enough people looking at identifying those arbitrage opportunities and clearing them out faster, right? Like, and Ethereum is too slow because the gas prices shoot up. All the stuff are bugs that we can fix, but it's actually quite amazing that Maker didn't like blow up, right?
Mhm.
It's still functioning. DAI is still worth $1, which is awesome. So from my perspective, I think looking back at this event, like 2-3 years from now, people are gonna be like, oh yeah, it's obvious, right? It works. It survived the biggest crash, and now like it's gaining traction, kind of growing with the space. I think there's a kind of a weird opportunity, I think, for crypto to almost 10x in its market share of humans, like brain share right now, because we're all stuck at home and the crypto teams are already decentralized, and I'm guessing most of them didn't even like skip a beat when we all had to be like quarantined.
Yeah. That's a good point. My girlfriend's over here
Yeah.
at home right now, and I say, "Hey, welcome to my life. This is what I do
Right,
every day."
yeah.
I
we
wanted to.
already go ahead.
No, go ahead, man.
Like even this stuff, right? Like we already had like a marketing and like kind of distribution set up that was totally distributed and decentralized. Like the fact that all these podcasts and the way how we disseminate information through Telegram and everything else, none of it was based on central services, right? Like it's all kind of like network. So to me, this is like kind of almost our moment. Like as the world starts rebuilding itself, like I think crypto will start eating more the traditional finance share.
Yeah, or at least that's the hope from within, right? Hopefully,
Yeah.
we do see that change. I do want to talk about security and specifically like transactions attacking a network, right? Because I think I went through it on EOS where this transaction or this contract was kind of exploited in a way where they were able to use this team EDOS was able to kind of like spam the network because the transactions were so cheap. So like, isn't there an opportunity couldn't you make the argument that as transactions get more expensive, it becomes harder to attack that network or harder to spam that network? What would you say to that?
So this is where like you see like layer ones cheating. So like Stellar, I think, has really cheap fees, but small capacity. So if you actually start using it, they'll throttle you.
Mhm.
And because of how their quorum is set up, those validators can actually just start doing censorship, right? Even though you have the funds to pay for it, but because you're trying to use the network, they just drop your transactions. And the same thing happened with EOS. So they had this kind of like clever hack with zero fees, right? There's no fees, but you have to have that much capital allocated. So that attack vector basically used that kind of an exploit around those economics to spam the network. We don't have those problems. We're literally pricing things as the hardware can handle it. So if right now the max peak capacity is 50K, right, and 2 years from now AMD Ryzen ships a 256 core machine, the capacity should be 100K. And the price can drop by half again, right? And this is all we're doing is like, we want to be in position to where like if we ever see demand go up, that we can just double the hardware, because those costs, like we're kind of targeting about $1 a second as pretty hard to spam. Like you have to have a lot of money to actually do an attack that's a buck a second. It's like $30 million a year if you think about it. We do have some kind of governors and control where if the load ends up being at 50% of the capacity for long enough, we can double the fees double. But effectively, like the goal is to just simply double the hardware. Like why not?
Right.
Like it seems obvious, right? Like the problem was that like during like kind of this CryptoKitties rush, like we didn't have the opportunity to like double the hardware of the nodes that are mining Bitcoin.
Why is that?
To actually,
they just weren't being produced.
It wasn't like a problem of number of blocks. It was that consensus is set up in such a way that the blocks have to be small enough to propagate through the entire network fast enough. So because of proof of work and the dynamics around like the gas, how much gas is allowed per block, they couldn't throw hardware at this problem.
Got it.
So it was a software issue at the end. Yeah, that
they were basically trying to like force something that's this size into a hole that's this big. Is that what you're pretty much saying?
Yeah, you can think of it as that like they had a design that had like it was designed to be low capacity because that's how that consensus model works. Like it can't work in another way.
Got it. Yeah. So let's talk a little bit about the validators and Solana. Okay, how do I set up my node? What's the setup there?
So we have like I think we have a pretty good docs on setting up nodes if you ever run any validator. So you can find them at docs.solana.com. But what we have is kind of this ongoing thing called Tour de Sol, kind of like Tour de France, but for validators, where if you go through all the kind of painful KYC checks and participate in Tour de Sol, we will give you a grant that you can use on mainnet to actually have stake for your validator. Tour de Sol is really just for you to like get your operations figured out, set up your validator, and make sure that it can actually run well and consistently and keep up with the network and figure out all the kind of like the ops side of it. So we are welcome to everybody across the world. We have I think on TDS, there's over 100 validators, and mainnet about 60, and mainnet's only been running for about a month. So it's growing pretty fast. To give you some context, Cosmos is 150 validators right now.
Got it. I know a lot of networks cap the amount of validators, and like they go out and actually are searching for the correct roster of validators, or at least a good set initially. So did you guys have any kind of initial validators that you had in mind, and is everything running well on the network so far?
We're standing on the shoulders of giants here. Like the work that Zaki did to create this like professional validator community is basically what we're leveraging. So we were able to kind of skip all that work and just pull from that community because they're already running networks, and to them adding one more network is actually like not a lot of cost, right? Those validators are more professionalized. They need to pay salaries, right? So they're trying to run as many networks as they can to kind of cover the bills.
So when you said Zaki, are we talking Cosmos here? Like all the Cosmos validators basically ported or added the processes for Solana?
Yep. So a lot of the bigger Cosmos validators are Solana validators.
Got it.
If you actually look at the space, my guess is that the intersection between Tezos, Solana, Cosmos, or probably all the main proof of stake networks, that intersection of validators probably have super majority stake in all of them.
Yeah. Much decentralization. I'm just joking.
Yeah, I mean, it's true, right? Like that's a huge problem for the space, and we need to figure out a way to like make it better, right? Like there's a lot of folks trying ideas there.
Yeah, I do want to. Yeah, I mean, you've answered all the Solana questions spectacularly. Did we leave out anything that maybe you want to touch on Solana? Okay. Otherwise, I kind of want to hop out and talk macro crypto markets and COVID and things like that.
Yeah, the main thing is that like I hope folks check out the stake at price guarantee, because that's really like a key component of us building a community right now in this really crazy volatile first year, right? Like nobody really knows what's going to happen, but for us, who we're looking for are those like people that want to participate in the network over the long term, because ultimately those are going to be the folks that are going to stake and create stable coins. They're going to be the ones that are collateralizing to create all of these like really fancy DeFi applications. We need those people. We need to find them. So we're trying our best to make sure that we give them like access to the network at a fair market price, like as close to it as possible.
Gotcha. All right. That's amazing. So let's talk about stablecoins. Let's talk about specifically like what you think Ethereum is doing with stablecoins in general, but in DeFi as you see it now. What's the next like move for crypto over the next kind of year? You saw, I guess 2017, 2018 ICOs, there was proof of stake systems. Now it's stable coins. Now it's DeFi. Where do you see crypto in the next 1 to 2 years?
I mean, I'm hoping we figure out a way to like scale us out to like kind of larger population. And I am not sure there's like a clear path there yet. I think that's kind of like the nut to crack. And I don't know, like I don't think it's even like a layer one is going to do it. I think it's going to be more of an application built on top of one of these. It's actually pretty like it's rare that like that an infrastructure thing makes the most money, right? Like when you look at the internet, it wasn't Cisco or Sun Microsystems that made the most money. It's kind of like Amazon.
Yeah.
Facebook, Amazon.
So what specific, going down that rabbit hole, what specific applications would make sense for like crypto and blockchain getting to users?
Honestly, this Reddit thing, like that could be really huge, right? Like it's not gonna, might take a couple years to kind of pick up, but maybe their mix of how they did it is not gonna work. But I think there's a lot of like opportunity with like just people avoiding ads as kind of our MOIP.
Right. Yeah.
if we don't have ads as our means of value over IP, and we have something else, and we can start capturing those network effects, I think that's where you can start seeing this like breakout into like mainstream. Like I said, I think once we get to like, you know, like 1996 internet, there were 40 million internet users, I think, globally. Right now, like I think there's about 50 million wallets out there. From what I understand, CoinMarketCap gets about 30 million iViews that they can identify a month. It's roughly, I think, kind of equivalent, right? And it took until like I think 300-400 million users on the internet when Friendster popped out of nowhere, and that was like an internet application that was built solely on the internet for internet people. You know, I don't know if you guys remember that, but it was like literally like out of nowhere, everybody was using this thing and the stupid social graph, right? And that was like something totally unpredictable. And like I'm waiting for that moment in crypto.
Yeah, I think one of those moments was also when the guys figured out that you can take credit card numbers and payments over the internet, and that was like a huge thing. I believe there's like a movie made about that. But yeah, I agree. You know exactly what you're saying. I want to also get your take on kind of like, you know, Bitcoin has been around as like the store of value, and it was created when the financial crisis hit. And like the whole purpose of it was to basically be against that inflation that you would experience because the responsible central banks continue to print money, devalue their currency, and so on, all this story. But we're seeing something different, right? We see like, you know, ridiculous stimulus packages right now that we've never seen in finance before. You know, and all this inflation that will, you know, come with it. But we see Bitcoin is actually dropping off, right? So we're not seeing kind of Bitcoin reacting to what it was kind of built for.
It takes a lot of time for trillions of dollars to propagate.
Right.
So I think the price, reality is that like the stock market and Bitcoin both dropped around 30%. But if you look at like volatility analysis, like Bitcoin should have dropped 60 or 70%.
If that
during the same, if they're basically correlated assets. So it is actually like just purely like just looking at statistical analysis, it's not that correlated to the financial markets, to the S&P 500. It's going to take a lot of time for the trillions of dollars to propagate.
But what about like just regular users? Let's say, you know, countries that are going to experience hyperinflation. You know, obviously in US, you know, we hold dollars and that's the reserve currency of the world. But, you know, elsewhere they can't, you know, do similar stimulus packages and not deal with ridiculous inflation. So that's going to impact like people on the ground. And, in certain countries, especially, with the Soviet Union background, how government usually try to keep the people hostage in that monetary, policy. Bitcoin could give them a way out, right? In that sense, if they can't discard their currency and hedge against the inflation that's going to be in their country. So it's like coming not maybe from the institutional side where you're saying trillions of dollars moving into Bitcoin, but coming from the retail side where maybe more demand will slowly start coming in from regular people from those countries that are struggling. What do you see in that?
Like, that's like, it's hard to predict how that stuff plays out. I think the massive amounts of money that is being spent by that's being injected by the US government is going to have more kind of a long-term, I don't know what kind of effect it's going to have on prices, but I think it's going to have long-term effect on productivity on the folks that depend on the stimulus coming in. There's even, I think, a joke already of bailout airlines. Its only job is to get the next bailout. That's the whole business model, right? If that becomes every 10 years, there's basically everybody expects $1 trillion package whenever the market crashes, then it really creates really adverse effects for the entire economy when it's that big. So I'm more worried about people realigning what they're doing. They're how businesses are operating to be basically relying on this thing. And then it becomes a self-fulfilling truth because you effectively have companies that take crazy risk to expand, knowing that when the economy crashes, there's $1 trillion that's going to protect everyone's jobs.
Yeah, it's what it is effectively the C-level employees are essentially their job is to kind of make themselves too big to fail. And if you get to that point, you're going to get bailed out by the government every single time.
Moral hazard.
Yeah.
All right, Anatoly, this has been a great episode, man. We touched a lot on Solana. We touched on kind of the macro markets, Ethereum, DeFi. I want to get your book recommendation here. We always do this at the end of the episode. So any book, could be fiction, nonfiction, crypto, non-crypto. What do you got?
Can I recommend a podcast instead?
Yeah, absolutely.
Yeah.
Okay.
Wait, actually, no, we're going to censor this because we don't want them on layer one.
This is the Revolutions podcast. And it basically it's the guy that did the History of Rome podcast, and it covers almost day by day revolutions going from the British Revolution, the American one, the French Revolution, down to the Communist Revolution, the Soviet Union. And the French Revolution is mind-bogglingly complicated and awesome. So much stuff happened. But I wish there was a book version of it. But it's a phenomenal deep dive into history, and how the crazy part about it is that you saw the actions of individuals taken out of greed or self-preservation accumulate into these massive social upheavals, and that's something that you cannot predict, and wow. Really cool. History is scary.
Yeah, I love History on Fire as well, hardcore history. So I appreciate the history shout out here. That's about it for the rest of the podcast, man. We're going to let you go here. But before you go, please give us links where we can find, or give us addresses where we can find more about Solana, more about yourself.
Okay, so Solana.com. So that kind of has all the information. Fairly easy link. And if you look at, or if you want to be a validator, go to solana.com/TDS and join Tour de Sol and be a validator. Docs.solana.com has all the documentation for running validators and building smart contracts, and join our Discord and bug our engineers about what works and what doesn't.
Awesome. Thanks a lot, Anatoly. It's been a pleasure having you. And of course, good luck to Solana on your roadmap and endeavors. maybe we can get you back again a little bit later so we can recap on the success that you guys are having. So good luck with all of that. And yeah.
Awesome. Thank you so much.
Hey guys, we hope you enjoyed today's episode. Make sure to check out Layer 1 on all the audio and video platforms listed in the description. Thanks for stopping by, and we'll see you next week.